This past week in the market wasn't great. We saw the worst drop in over a month, and surprisingly, it wasn't because of bad economic news. In fact, markets fell because there was no news at all. Hi, I'm Jason Hunsucker, CEO and Senior Advisor at Sequoia Advisor Group, and this is your weekly market update. The recent government shutdown caused a blackout of key reports, jobs, inflation, and other data the Federal Reserve depends on. And since the Fed is famously data dependent, they're now flying blind. And the result? Well, markets got nervous. Tech stocks, last year's top performers, fell hard, while energy and value stocks held up better. The shift is a classic example of what we call a flight to safety. But here's what's interesting. Markets can handle bad news. They can price it in and move on. But uncertainty, that's often harder to manage. Now, this isn't the first time this has happened. Back in late 2018, a 35-day shutdown created a similar data blackout. The S&P 500 dropped nearly 20% from its highs. But as soon as the government reopened and reports resumed, the market rallied nearly 5% in just weeks. And this kicked off one of the strongest bull runs in history. Now, I'm not saying we'll see the same outcome this time, but history does tend to rhyme. And when the fog lifts, and it will, investors who stay disciplined and hold strong, high-quality companies with real cash flow and solid balance sheets are typically in the best position. And so here's this week's takeaway. Markets fear the unknown more than bad news. But with patience and a long-term focus, uncertainty can become opportunity. So stay disciplined, stay in quality, and we'll see you next week.